Dylan Fry, the real estate guy here, talk to you about what your most important coverage is when you're talking about insurance. It's your liability, and we want to make sure that we get that correct. In order to do that, we're going to have to take a look at this quick formula: assets minus debt plus 2 times your income. That's going to mean your house, your cars, your 401ks, minus any loans, your vehicle loans, credit cards, mortgage payments, and then 2 times your income, which is any reported income on your tax return. This is going to give us a baseline for how much you could be at risk for if you were to be deemed at fault in an accident. With that being said, let's run through a scenario. Let's say we've got a couple. They've got a house that's worth $200,000. They owe $190 on it. They have a 21 Explorer. They owe $30 on it. It's worth $40. They have a 20 Chevrolet. It's worth $45. They owe $37. They've got about $15,000 in their 401k, $3,000 in their checking account, and $5,000 in their savings account. They also have about $3,000 in credit card debt. The wife makes $35,000. The husband makes $40,000. On the next page, we total their assets of $298,000 minus the debt of $260,000 plus 2 times their $75,000 annual income, which is $150,000. Giving us our minimum at risk of $188,000. Now they currently have $100, $300, $100 on their cars and $300,000 on their home. With their home being over that minimum at risk, we're going to focus on the cars today to make sure they have proper coverage. As you'll see here, the 100 stands for $100,000 per person. The 300 is $300,000 per accident, and the last 100 is $100,000 in property damage. Now let's imagine that you are one of these clients and that you caused an at-fault accident today. You had a 2018 Ford Explorer carrying Jane and John Doe. Jane had a couple broken ribs and her total medical expenses totaled $15,000. John, on the other hand, had pretty severe injuries, including being put in a coma for a few months, and his total medical expenses were $128,000. Now, for the total Ford Explorer, it was $30,000 in payout. Let's talk about what your policy pays. With having 100, 300, 100, the total amount that the policy will pay out for John is $100,000. The total that it will pay out for Jane is the full amount of $15,000 because there's $100,000 per person, $300,000 per accident. We're not near the $300,000, so it's going to go ahead and pick up that $15,000 for Jane. Now, on the Ford Explorer, you have $100,000 in property damage. So therefore, it's going to cover the full $30,000. The concern is John had $128,000 in medical expenses, and your policy is only covering $100,000. Therefore, you pay the other $28,000. The total claim was $183,000. Now, the reason I bring up the $183,000 is because it is less than the $188,000, which is your minimum at risk. With that being said, you are required to pay the remaining amount of John's medical expenses of $28,000. That must be paid in 10 years. So therefore, $28,000 divided by 10. Then we divide that by 12 and you get $233 a month. Now, I always ask my clients, could you add this to your monthly payment tomorrow? If not, we have some options. The best way to do this is to increase your coverage from 100, 300, 100 to 250, 500, 250. That's going to make sure that your entire minimum at risk that an attorney could come after you for is covered under all circumstances under your policy. Now, the premium difference on that is about $10 to $15 per month, but it may vary depending on the carrier that you're using. Now, everybody's at risk is going to be a little bit different, but the main thing is to be talking about it and making sure that you have proper liability coverages to protect your assets. This was Dylan Fry, the real estate guy, here to help you buy, help you sell, help you protect by insuring it well.